Very disappointing, a very difficult day. What can I say? I'm sure that everyone is watching the news and see what's going on in Ukraine and Russia. So all this unfortunately changed the things and the conditions in the market by causing a lot of drifts, declines, free falls, even though we could say so. Let me also share the screen with you, the MT4, before we analyze everything. Over here, we can see oil, which for the first time it has managed to break the $100. That was something that it was expected to be done like months ahead, not right now. That was the peak of the year's forecast. And unfortunately, due to the invention and due to the risk of it, we've seen this happening uh, just today. So a lot of things going on, but it seems that for the geopolitics, the this fear of war is really the one that affecting the markets right now. So I would like to spend just few minutes summarizing what's going on right now into the markets. Okay. Before we see together the US data, which are extremely important as well. So we have today jobless claims, but more importantly, we have the US GDP, the fourth quarter GDP, gross domestic product from US, along with new home sales, oil stocks from EIA, some Fed speeches and ECB speeches as well. But to be honest, it seems that let me put the chat on as well. Hello everyone. Hello Mokoena. So I was about to say that I don't believe that the data will affect the market. Unfortunately, is everyone is really watching what's going on, and then tension is driven mainly by the risk sentiment and by what's going on in Ukraine right now. And so even though it was a it is a very busy, packed from US data day, it's unlikely to turn the attention of the investors, of the markets, into the into that side of the market, into economic data. So as I mentioned, Russia, Russia's invention. Hopefully, you can hear me. Russia's invention of Ukraine and its march to Kiev has weighed sharply on risk appetite. That's why we have seen pretty much stocks in Europe, in US, and I will put that on as well. In Europe, in US, as I was saying, crashing, literally crushing. So that's the daily candle. Crash. Crash of European cruises, crash of DAX by more than 5%, crash of FTSE by more than 3%, Nasdaq, Dow Jones, S&P 500, more than 3% decline just today. The same stands for the Russia's MOEX, which blanked over 40%. 40%. VIX, let me show you VIX. VIX is extremely important as well. So let me just, okay, because I have the news as well on the left hand side, so it's a bit tricky. So as I was saying, VIX, let me find VIX. This is the daily chart. You can see how big this daily candle is. If I put the 1 hour, here we are. This is today's performance. So VIX jumped actually jumped by nearly six figures just today. So from the 26, 27 lows, bridge 34 levels. So you know that VIX is a volatility index. So clearly there is nothing to be proven, actually. Is how volatile things are right now. So and we have seen something that I mentioned in the morning as well, through our morning update, our morning article. Markets, due to this development, due to these conditions, they are searching for safe havens. So they have turned their investments to safe havens. And what's the safe haven? Is of course the safety of dollar, the safety of gold, the safety of metals in general, because they have pretty much stable price, the safety of of gold as well. I mentioned that the precious metals in general, like platinum, palladium, aluminium, all these are and dollar are the ones that the investors have turned into to find some kind of a safety for their investments until we are seeing these conditions, this situation to calm down a bit. So, why that happened? Oops, sorry for that. Why that happened? Why we've seen all these sharp moves in oil, in gold, but all these sharp declines in stocks and all the rest. Um, why is that? Because the world in general wasn't expecting that actually Russia will invade. They were not expecting, so to take over Kiev, to actually invade in Ukraine was it was the worst case scenario. So worldwide, it wasn't expected that actually Russia will proceed with the worst case scenario. So the fact that actually that has been done this morning at 4 o'clock in the midnight, in the morning, the fact that it has done, so the worst case scenario is in front of us. It happened. This is what caused all these drifts. So VIX jumped, oil is up, fears of oil disruption, due to the fears of oil disruption, supply disruption. Gold is up as a safe haven. Platinum, palladium is up due to metals, but all the rest is down. So uh, stock markets are down. Treasury yields are down double digit with longer maturities reaching at 1.85% for the 10-year one and the 30-year one at 2.16%. So surprisingly, the same stands for bond, German bond, for gilt as well. So the surprising intensity of the war is likely to temper the central bank's hikes that were expected in the near term, but also the data, unfortunately. So feel free to ask me anything you want, of course, okay? I'll do my best to reply. Mohammed, okay. Buenos dias, everyone. Buenos dias, Lalo. When our grade 5 of G8 will disrupt in this situation to solve this clash between force. I'm not sure whether this will happen, dear Zahir. Um, there's so far the West, and by saying West, I'm referring to Europe, I'm referring to US, I'm referring to UK. None of those, even though they are criticizing Putin, they are not discussing uh, about interrupting this situation. They are only discussing about sanctions. They have already implied some financial sanctions to Russia, to Putin himself, or to the President Putin himself, but they haven't talked for any kind of military attack. So who knows? Who knows? Unfortunately, this situation is extremely disappointing. We are in 2022 and we still see real wars instead of people like using the diplomatic way like they should be. So why the huge effect on yen after attacks on Ukraine? Okay, so remember, yen along with Swiss, along with let me put yen on, along with Swiss, along with dollar, yen is a safe haven as well. Okay, so let me just find yen as well. Here we are. Perfect. And this is the 1 hour chart. Okay, so yen is a bit is a tricky so yen is a tricky asset. Why is that? Because yen is a safe haven. So when we are facing um, risk appetite conditions, it should appreciate it. So yen should get stronger, and this is what happened once the attacks were announced. So dollar yen went down, so that means a strong yen against dollar. But now it has the last hours, actually since the European Open, it has changed. Why is that? Because dollar is strong as well. So the dollar, more precisely, it's also a safe haven itself. Okay, so sorry, I'm watching the news at the same time. That's why I got distracted a bit. We'll let you know the things that I'm just watching right now. So, yeah, yen indeed is a safe haven, but dollar itself is a safe haven. That's why we're seeing this reversal, because it seems that the flight to safety has seen the yen rallying initially, but because the dollar is also a strong currency, it's also a safe haven. It has this situation reverted quickly. So the dollar also rose against the majority of the currencies as Russia staged a full blow invention. So sorry about that. I'm watching that. I have just seen that Bank of Russia unveiled first emergency measures, saying that it will intervene in the foreign exchange market and expand its Lombard list of securities accepted at collateral. The bank also said that it will provide additional liquidity to banks by offering 1 trillion rubles in an overnight repo action. Oh my God, this is insane. So what we're seeing is really sanctions on the one side, response from Russia on the other side, and this will continue. And at the same time, we actually have the invention, which it hasn't stopped. They keep moving, and they have took over Kiev as well. So in regards to the what I mentioned about the Bank of Russia and they intervene in the foreign exchange, so it's a measure that comes from Russia due to the sanctions that the West has imposed. So this might add further volatility and liquidity into the markets. To be honest, so it's a bit of a dangerous standoff between West and Russia right now. As I mentioned, the MOEX, the Russian index, is more than 45% decline. It's back to 2016 lows. Bank of England on the other side said that Russia launched special military operations in Ukraine. We know that. Is there anything else that is new? So markets pretty much in a free fall. Okay, let's see. Since you asked about dollar yen, let's stick to dollar yen for now. Let's start with dollar yen because it was the one that it was a bit it's a bit confusing. I understand that, but stick, guys. That what is the main theme of the day is that the dollar remains on beat. Okay, along with assets that they don't tend to lose their uh, um, their value, like gold and metals. Okay, that's why, regardless of the characteristic that the yen has as a safe haven, that's why we're seeing this reversal. Okay, so it's better if you're interested on trading something like that, my dear Zahir, or Muhammad. I'm not sure which one is the name, and then which is the surname. Sorry. So if you are interested in this kind of cross, then stick to what you see. Stick on the technical side. So, for example, this is the dollar, the 1 hour chart. Sorry, so we can see a bearish cross of my fast moving averages over here. This is my 5 and 9 exponential moving averages for the 1 and 30 minutes chart. Bullish cross over here, they keep pointing upwards. Momentum, even though it looks that it has decreased a bit, is still negative. Let me get down to the 30 minutes chart to see whether this jump ran out of steam. So stochastic still pointing upwards, RSI flat, um, moving averages are keep pointing upwards. So it seems that there is further steam to the upside for now, for the very, very short time frame, with the next resistance area at the round 115 level. We'll put it out here. And previous high, if 115 breaks, another 10 pips higher. So stick on what you see, okay? So a lot of questions. A lot of questions. Thanks, I understand. My pleasure. Thank you. I'm not sure what you're asking over here. Frodi, Vom, sorry, I don't understand. Um, Daniel, are you putting this? What's that? Sorry, I don't get it. You have the flags on. Are those flags for analyzing the currencies or not? Let me know. Aussie will be affected or not? Of no, of course. Aussie, Australian dollar. Australia is the leader of gold. Is the biggest exporter of gold. Is the mother of gold, I could say, or one of the mothers of gold. So, okay, let's put Aussie back. Aussie dollar. Here is the daily chart, and what you can see over here? You can see a decline, okay? A decline. Why? Because of the strong dollar. Actually, I should have started with the dollar, to be honest, because everything is related. All the moves that we are seeing is because of the strong dollar. So even though someone could say, but we have a really, really strong gold, so gold actually spiked to 1970. That takes us back, guys, to, come on, close that. That takes us back to 2020 highs. Even though gold is extremely strong due to a safe haven, non-yielding asset, and etc., Aussie hasn't been boosted by the strong gold. And this is because everything related to the dollar and the treasuries. What I mean by that, the strong dollar is the theme of the day. Strong dollar, strong gold, stock plummet, drifted, oil up as well. So, um, I lost my words now. Yeah, so that's why we're seeing Aussie drifting lower. That was because of the strong dollar. So in a big, big decline, my dear, who is it? Who was it? It was Muhammad as well. Muhammad, in a big decline, strong dollar, you can see that intraday, at least in this 1 hour chart, nothing is pointing that this drift has ended. Okay, why is that? You can see that Bollingers are still pointing lower, are still expanding southwards. Fast moving average also keep pointing downwards. MACD extending lower, so there is an increasing bearish momentum. RSI the same, stochastic the same. So it seems that the market still has a lot of sellers. As long as there are not positive headlines, as long as the condition doesn't calm down a bit, we're seeing a lot of drifts, we're seeing a lot of inflows to the dollar in order to find some kind of a safety. Okay, so that is affecting all the dollar related currencies. That's why Oz is down. The same stands for euro dollar as well. How can you see how big this daily candle is? It has returned back to January's lows. If I put the weekly chart on, you can see that it's really retesting the areas that we have seen back in 2020 and 2019. So a lot of bearish buyers. We are in a bearish market since last night. Okay, a break of key psychological levels are signaling further declines, and we're pretty much searching for immediate support levels. So immediate support. So the next step for euro dollar in the medium term is down to 110. If that breaks, it's going down to 108.50. If that breaks, then pretty much the floor is down to 106, which was the low that we have seen back in the beginning of 2020. Okay, so you can see these moves in all the dollar crosses. So this is euro. The same stands for pound, right? So that's in a free fall. Free fall, what can I say? Is the European Open. Uh, so this is the 1 hour chart. We had just a very, very small temporary immediate support at 133.86. That's broken already. Oh my God, sorry. It's my connection. And it keep extending lower. MACDs are expanding lower. Stochastic the same. So what can I say? I'm not sure. What can I say? Oh God. So everything is affected. You're asking if that is affected, that is affected, that is affected. Of course. Of course. It's a war. It's literally a war in 2022. So uh, um, stock markets, European, UK, US stock markets, Asia markets are in a dive. Okay? Confirming that there is a bear market. Dow Jones is down in a sell-off as Russia launched an all-out invention of Ukraine. Shares slumped. You can pick any share that you want. I can put on, I don't know, Apple. Okay, Apple is not open yet, so I should choose EU ones, the ones that they are actually open. I will just randomly use AstraZeneca. Gapped up down. I will randomly choose Admiral. Down. I will randomly choose HSBC. Down. Share market. The global shares are slumped. Oil on the other side is up, breaking the $100 territory. So here it is, 100. Right, $100 a barrel, while the safe haven of gold, of government bonds, and the dollar are the only one that they surge higher in the flight of safety. So the only things that they turn bullish is the safe havens. So we're speaking about government bonds, we're speaking about gold and oil and dollar. That's it. Three things. All the rest are diving, okay? Three things that are traditionally provide safety are these four: government bonds, gold, and dollar, and oil as well, but not because it's a safe haven, but because this what happened, it will cause a supply a disruption. So supply disruptions are supporting the oil prices. So Ukraine fought Russian forces along particularly its entire border with Russia, confirming the worst fears of the West in the biggest attack by one state against another in Europe since World War II, unfortunately. So, okay, the West is still trying for the diplomatic way, but the diplomatic way is dead anyway, for the time being at least. So, yeah, what can I say? Just to calm down a bit and to discuss something else other than the war, let's sit together, guys. I will come back to you, dear, with the gold, with the Aussie cat. Let me just quickly check the results because of the outcomes, the economic data, because we had um, the US releases the US GDP earlier, so I ignored them, but it's good to just have a quick look. So the data are out from the US, jobless claims, GDP for the fourth quarter, and the PCE. So everything beat expectations. Personal consumption expenditure and the core one a spike higher, so 5% personal consumption. What that means? It means that people started spending. So it means that the economy is continuing to grow. We are pretty much starting to see numbers and economic data that they were before the pandemic. Gross domestic product, so the growth of the economy of the United States in the fourth quarter has increased by 7.2%, has grown. So US economy has seen growth of up to 7.2% in the last quarter of the year. Jobless claims, okay, they came lower than that was what was expected, so that's a bit positive. Even and the continuing jobless claim also detected slightly, not significantly, slightly, suggesting that okay, people might stop really enjoying jobless claims but returning back to work. So an overall positive report from the United States, sustaining the growth of the economy with the jobless, with the labor market improving slightly. So, but yeah, nothing really. So if I put the dollar back on and see the 30 minutes chart, we can see that it wasn't really affected by the data, but with what was going on in the rest of the world. So let's get back to the screen. So yeah, I'm getting back to your question, dear. So we have seen dollar, we have seen Aussie. So I will move on to dollar cat because you mentioned dollar cat as well. Uh, there anything new? Nothing really. The dollar and yen has largely steady just under its best levels in New Year trade, with most of moves coming overnight as Russia invaded Ukraine. That's absolutely true. It wasn't the reason why dollar is still appreciated is not the data, but is the continuation of this extension, this rally that we have seen uh, since overnight. Um, so there's nothing new in my news feed. Dollar cat, you ask about dollar cat. Let's put dollar cat on. By the way, before I move to dollar cat, guys, you should know that all the European currencies right now, okay, we have the common currency, which is Euro, but we have also European currencies such as the Swiss, the Polish zloty. We have um, okay. Let me just find everything so you can follow me as well. And here will be everything. Okay, we have the Danish krone. We have the Hungarian franc. So everything are under pressure and against euro. So here, for example, is the Hungarian front. So Hungarian front is getting weaker against the common currency, the euro. The same stands for that's the Norwegian kronon, That's Polish zloty. Boom. So if you remember the map, the the countries that they could be affected, the ones closer to Russia, are the ones that their currencies is under under a lot of pressure against euro and against US dollar and against the majority of the currencies. But we are seeing a lot of volatility, a lot of big moves on those currencies, which we pretty much ignore, right? I don't think any one of you has ever traded Polish zloty or Hungarian forint or I don't know, Czech or Danish krone, etc. But yes, due to this situation, Romania is the next one, Moldova is the next one. Uh, um, so sorry. Um, Sorry. What I was wanted to say. Yeah, so we are seeing from exotic currencies that there have been from emerging markets, exotic currencies being affected and being under pressure. Poland, Polish zloty, under pressure against euro and against dollar. So all this, something that I'm just giving you food for thought, giving you other assets that you might haven't noticed that they have significantly impacted. So I'm returning to dollar cat. Sorry, I'm bumbling a bit. I'm like talking a lot. Sorry for that. Dollar cat. So here it is, dollar cat. Let's not forget that dollar is on beat. So the beat on oil is not coming first. It's not really affecting the dollar cat, but it's mainly the big inflows, the huge inflows that we have in dollar. That's why dollar cat is to the upside, kicked and breached the 128.46 level. This is the 1 hour chart, my dear user. So look at that. Currently, we're pretty much seeing consolidation. Okay, so it's a very tricky point because now we have a lack of direction intraday because 1, 2, 3, or 4 hours in a row, the asset didn't really move significantly. It just stuck in this area. Also, the fast moving averages are started pointing on the right hand side, so that suggests consolidation. RSI has flattened. Stochastic turned lower, suggesting that there is the need of a correction. So there is a lack of direction over here. So it's better to be a bit patient. Put these levels on as your immediate support and resistance level because for the time being, the asset is consolidating. So we're not really sure whether it will start turning lower and reversing or whether it will extend again higher. So put this line on. These are our immediate support and resistance level in order once they break to be able to identify the direction of the asset. For the time being, it's consolidating. Okay. You can see it, Lalo. You can see it on your market. You can see it. It already happened. So you know that you can see that dollar remains upbeat against all the other currencies. You can see that euro remains weak against a dollar, but is strong against the currencies that are close to Russian borders. Okay, you can see it from the moves. You can see that yen is strong because it's a safe haven, is strong against euro, is not strong against dollar because dollar is also a safe haven, but is strong against other currencies such as euro, such as where is it such as Aussie, such as pound, such as, so you can see it from the moves. Everything is affected. It's not that I know what is being affected and is not. It's a war. So the market is being affected as a whole. All what's going on today, all the moves that you are seeing today, Lalo, is due to the invention. Okay, but you should know that in theory and traditionally, and what we are seeing as well today is that you should know that the safe the safe havens are precious metals, metals sometimes the industrial as well, dollar, and government bonds. These are considered traditionally in the history of the world, in the history of market, the assets that are considered as safe havens. So what that means is that by default, by traditionally, when something is happening in the world and there is a lot of risk, there is a lot of uncertainty, people trying, they are moving their money from risky assets to not non-risky assets, such as dollar, precious metals, because metals, we know metals, we can touch them. Precious metal are never losing their value. So, and government bonds as well, because government bonds, especially this year, are expected to be well supported by the rate hikes of the central banks. So they are good investments. So people are turning their money, they are taking their money from risky assets such as Bitcoin and all everything else, and they are putting it to the safety of dollar, metals, and bonds. This is what's going on forever. I mean, this is when we have a war, we have politics, we have anything. Even when we had pandemic, when the investors feel that there is a lot of risk in the market, they are taking their money out of the risk assets and they are putting them in the safe assets. That's why we know that dollar is on beat, gold is on beat, metals are on beat, government bonds are on beat, and everything else is under pressure. The only exception is when we compare euro with um, other European currencies, so it is stronger than the other European currencies. And when we compare yen with all the rest of the currencies other than the dollar, yen is also a haven, a safe haven, so it's been appreciated against all the currencies except dollar. Okay, so I'm really presenting what I'm seeing since yesterday. But the other side has been beaten by gold very poorly. What do you mean? Yes, you say right, but the other side, dollar, has been beaten by. Yes, because gold is a safe haven. Gold is a safe haven. It has also always been. I mean, remember that. Let me get back to gold. Remember when initially let me zoom out a bit. Initially, the pandemic started, right? Pandemic started when was it? In March 2020. So the only asset that was moving up when the pandemic started, it was gold. Because, sorry, gold, let's not forget that gold is the most Asian um, asset, tradable asset that we have, right? Um, um, so, um, yeah, so gold never lose its value. You can say, but Andrea, yeah, we can see it going down. We can see it reaching $1,000. We are seeing it, or even going below $100, $1,000, etc. Yes, but it's an asset that will never get back to zero, will never get back to $1, etc. It's something that we can touch. It's precious, right? So that's why also let's not forget that we didn't had fiat currencies before. We didn't have printable currencies relied in order to exchange assets between us. It was our currency in the past was gold. So um, gold is an asset that is has the advantage of representing a store of value. Okay, so yes, dollar so you can say what you said, exactly your words is that dollar has beaten by gold. Of course, gold is a safe haven. So regardless, even dollar is on beat, gold remains up because it's a safe haven. So people are investing in both. They are investing in dollar and they are investing in gold and they are investing in government bonds as well, because are the three safe havens. They are three things that we could store, we can consider as a store of value. So they are putting that money over there until all this uncertainty, all this fear comes down. It's a physical commodity. Gold is a physical commodity. It cannot be printed like money, and its value is not impacted by rate decisions made by governors. So, and also because gold has historically maintained its value over time, it serves as a form of insurance against adverse economic events like the one that we have today. Okay. Uh, um, yeah. So hopefully I replied to your comment, dear Zahir. Hello, dear. Welcome. You're welcome. So gold. Okay, gold. Of course. So guys, what can I say? Can you see that? This is monthly chart. So look at February. In February, this month, the asset, the gold spiked to 1970 territory, breaking 2 years resistance. So if I put the weekly chart on, sorry, um, this is the weekly chart on. It broken 2021, so last year's resistance, and it's back to areas that we have seen since August, October, December of 2020. So it has breached and broken these resistance levels. So the next resistance area is pretty much over here, back to the highs of 2020. So, but this is weekly chart. So let's have a look to find some immediate resistance levels. It will be a bit tricky though. Um, so I'm gonna use my Fibonacci expansion. So setting my Fibonacci expansion, zoom out a bit. Sorry. So I'm shifting to the 1 hour chart. I believe that's what you want. Okay, I'm gonna put my Fibonacci expansion based on today's rally. Okay, zoom in a bit, get down. So 161.8 Fibonacci expansion is up to $2,026. Okay, but this is this is this is way high, so we need to find an immediate resistance levels. So sorry guys, it's a bit tricky. I'm gonna use also I'm gonna use my ATR as well. So ATR in the 1 hour chart is up to $11, 11 pips movement by applying, okay, over here. So the upper Bollinger Band area, can I zoom out? Oh, It's too difficult. Okay. By checking my, so immediate resistance level obviously is at the latest high, 1973. The very next one, you can find the very next one by checking your Bollinger Band area. So the upper Bollinger Band level is at 1978. We'll make it round. Okay, so 1978. So these are the immediate resistance levels. On the break of those, you will need to search for round numbers. So that means, come on, come on, 1990, 1995, 2000, and etc. Okay, what can I say? Extremely bullish. It hasn't run out of steam yet. This is the daily chart. Momentum is still rising. Let's see the 1 hour chart. It has calmed down a bit. It's consolidating for the last 4 hours, but the momentum is strong. So this looks to be just a bit of a correction before another jump to the upside. So put some lines on, put some immediate resistance support levels just to monitor when the rally will begin again. Okay. For now, because it was overbought, it had to correct a bit. So what we are seeing the last 4 hours is just a correction, because by checking your momentum indicators, you can see that they are all positive. MACD well above zero. So there are a lot of bulls in the market. RSI, it has flipped slightly to the downside, but remains within the overbought territory still. So still bullish momentum over there. Stochastic turned down a bit, but it doesn't have an aggressive slope pointing to further decline. Why? Because this looks to be a correction before another attempt to the upside. So immediate support is at 1950. If that breaks, then the asset could retest the 1933 area. However, if it fails to break 1950 and we are seeing a reversal, the immediate resistance level is at 1974. Um, I'm not gonna say what you should avoid or what you should not avoid. Just try, because there's a lot of volatility in the market. Try to trade what you see. Okay, try to confirm with your momentum indicators, with your technical analysis before you enter the market. And for God's sake, use risk management, use stop losses, use target levels, and a logical, appropriate stop loss, not too far away, not too tight, and at a level in which if something goes wrong, you can afford the loss. Okay. And of course, don't exposure your whole account. Okay, just a portion of it for each trade. Okay. Um, no, that's not our link, dear Amin. Our website is hotforex.com. Okay, hotforex.com. Hey, Adi. Welcome, dear. Okay, very good question. An excellent question. Okay, so, the computers. So, some, who asked for it? Amanze, what is risk on and risk off? Okay, it's a term that we're using for presenting what's the sentiment in the market. So when we are saying that we are in a risk on mode, it means that there is investors, market participants have a very high risk appetite and bid up the prices of assets in the market. Okay, so like what's going on uh, right now, pretty much. When we are saying that we are in a risk off mode, it means that market participants become more risk averse and sell assets, sending the prices lower. Now, when we are saying that there is a risk on risk, sorry, just to simplify a bit this meaning of risk on, risk off, just have in your mind, dear Amanze, that when we are saying that the market is in a risk on environment, it means that it means that the market is in a positive investment sentiment. So when we're saying that, we mean that we usually see the market participants, the investors, to use their money and to invest their money into stocks and other high yielding instruments, but mostly stocks. This is when we have risk on conditions. What else? What else? What else? Uh, the opposite scenario, when we have risk off conditions, is when there is an overall uncertainty into the market. Okay, an overall uncertainty, a fear, like today. Okay, and when we are seeing something like that, we are seeing the markets shifting to, sorry, risk on is what we are facing. So when we have a risk off is when there is uncertainty, there is negativity, due to geopolitics, due to politics, due to whatever. Okay, so when we have a lot of negativity, when we have a lot of uncertainty, so investors tend to sell the risky assets in these conditions, and they prefer to buy safe assets. So this is what we are seeing today. Okay? When people are in a fear, they sell risk assets and they buy safe assets, such as bonds, gold, and dollar. Okay? If we don't have these conditions and everything is doing good, there is nothing significant in the world, and so on and so forth, we are in a risk on mode, which means that people are investing also to risky assets, because risky assets tend to get expensive, so, and they move faster. So if there is nothing really, if the markets are optimistic, they also invest to other stuff that they are riskier assets as well. Hopefully that helped you. So, guys, before I close the session, any assets that you want me to cover? Any assets? It's now or never. So, yeah, I mentioned platinum before. Platinum has a huge rally due to the invention, a bit of a reversal down. Right now, it seems that it's correcting, turn below the 20 period moving average, a bearish cross, so we might see further decline of platinum for the time being, for the day. VIX enter sideways territory, so find your immediate support levels and the immediate resistance level before, just to be prepared, for the next move. So it's in a descending triangle. This is what I can see in this 1 hour chart VIX. So if it breaks this descending triangle to the upside, then that would be a bullish signal. If it keeps expanding lower and even break this area that I have just drawn, we might see it reversing and declining. So if you don't have anything else, we'll call it a date. I think we covered everything. I'm not sure whether I missed something. Um, Let me just check a bit. But the trends are there, so you can see trends. It's pretty clear what's going on. The only thing that you have to do is check your technicals, find support resistance levels before you take the decision to enter the market if you want to enter the market. So trends are there today. They are pretty clear, pretty clear. This is Swiss, another safe haven. Oops, let me. So another safe haven that got a boost initially and now is turning sideways, hunting for correction. So yeah. Let me check the questions again. Thank you for okay. Since there are no further questions, I will call it a date. Thank you very much for participating. Hopefully you enjoyed. Anyway, if you need anything else, me and Stuart, we're always here. I think the majority of you know our email address is called webinars at hotforex.com, but you can find us in social media anyway: Instagram, Telegram, Twitter, Facebook. So feel free to ask anything you want, okay? So yeah, thank you very much for attending. Hope you're having a great day ahead. It's an extremely volatile day, and this is expected to continue for the upcoming days or even weeks. So, guys, please use your risk management before entering the market. Okay. Thank you very much. Have a great day ahead. See you again next